Hey everybody, I am Stacy Esser and I am here to give you guys our monthly market update, our real estate update for Northern New Jersey. I'm representing my entire group of professional real estate agents that are here to help you for all of your real estate needs. Normally, I would jump into leading and lagging indicators, which are great future storytellers of what's going to happen in our market, and also a good look behind. But there's so much going on with the mortgage market, and that is the story that we need to jump into. So I don't know if you all are updated on this, but I'm excited to share with you what is going on and how the volatility in the mortgage market may affect your real estate plans as a buyer or a seller. So I'm going to give you some tips on how to manage the volatility at the end. So I want you to stick around and let's just get into what's going on. So since May, mortgage rates have been steadily declining driven by several key factors. We're talking about a bond market rally that's been gaining momentum due to softer economic data, including cooling inflation, slowing economy. And to that, the Federal Reserve hints at possible rate cuts. And well, we have a perfect storm that has pushed mortgage rates to their lowest level since April of 2023. In the past few months, we've been going through the data, going through the leading indicators and lagging indicators of real estate in Northern New Jersey. And we've seen really the market kind of slowing down. We never really saw a big pickup in sales or pendings or listings for that matter. So why is that? Well, the mortgage rates have been pretty sticky at a high number, and purchase applications have really had negative prints over the last 12 months. So I don't know, buyers are sort of hemming and hawing, maybe sort of waiting to see what happens. I mean, the Fed has been hinting at mortgage rates the entire year, but nothing has really happened. And also, I want you guys to remember that 65-70% of all of sellers are buyers too. So everything is connected. So let's just go back to the mortgage rate scenario. So on my screen, what I'm showing you is the volatility in the mortgage market. You could see, this is actually a July market update, but I'm doing it the first week of August. And you could see that as of today, August 5th, well, the mortgage, a 30-year fixed rate mortgage was at 6.34%. And if you travel backwards in time, you see how those numbers are changing. And this is actually a fabulous website if you all want to look at this yourself. But this is Mortgage News Daily. I actually have an app on my phone too, and it gives me everything that's going on in the mortgage world. Plus, it gives me great housing data. Plus, it has a calculator, which I'll show you in a little bit too. But if you go back to what should have been like the peak of our spring selling season, April, okay, right in here, April. This is April 24th, right here. You could see that we hit 7.52% in mortgage rates. So 7.52% in mortgage rates. That's a really high number. And we are now currently 6.34. So we are more than 1 whole percentage point down in the first week of August. So what does that mean? Well, I think everybody's concerned about the volatility and whether it's going to stick. When the buying market sees lower rates stick, they tend to come back out and start buying again. Purchase applications rise. But just like when the higher mortgage rates are sticky, people tend to lean out. When these rates are lower, people tend to lean in. But more than that, what I think is important is understanding the difference that makes in people's wallets. And the difference of 1 percentage point for mortgage rates can equate to 10% buying power. 10% buying power for a prospective buyer. All right, let's look at this a different way. So here is a snapshot of a 52-week range in mortgage rates. Again, I'm sharing with you all Mortgage News Daily. It's a great app. And you could see that we're currently at 6.34%. And the 52-week high was 8.03. So that 6.34% is significantly lower than what we've seen literally in a year, this 6.34%. So let's take a look at how those rates and the variation of 6.34% versus like an 8.03% rate would affect a home buyer in northern New Jersey based on the average home that is selling in northern New Jersey. So just let's take a look at the math. All right, let's do it. All right, so let's grab two data points. We're going to look at the median sales price for Bergen County, and then we're going to look at the median sales price for Passaic County. So these are two counties that my team does a lot of business in northern New Jersey. So let's start with Bergen County. We could see that the average, the median sale price is $731,000. I'm going to write that down. And we're actually 11% over year after year. So that's the first number. And now I'm going to drop into Passaic County, and we're going to look at Passaic County also and see what that price is. So Passaic County is $548,000 and also 11% over year. So wow, you could see, you guys, this is just some data that I pull from Redfin, and it's just downloadable data. Anybody could grab this data. I just pull it by county, and I'm looking at this yellow line here. That's my line for 2024. And if I wanted to, like, just for, the fun of it, look at what was going on in 23, 22, 21. I mean, these are the median sales prices in Passaic County through the year. This is 2021. You could see that we were at 432. At the end of the year, 462. And by the end of the year for 2023, Passaic County was at 515,000. But right now, we're looking at where the median house is selling at in the end of July. And we're going to now go right back over to that mortgage app to see how the difference of the high 7% rates to the 6% rates can affect the buying power of you as a buyer. So let's take a look at that. Okay, so this is a really fun part of the website, and basically it lets you compare the loan size and your monthly payment and the difference of what your monthly payment would be. So I just put in today's average 30-year mortgage rate, which is 6.34%. And then I put in where we were in April, which was 7.52%. Obviously, rates will vary with your lenders, but this is just, for us to sort of just get an idea of what kind of actual tangible difference it makes to a potential, home buyer. But you can see here that the loan at 6.34% is $3,400 a month. And of course, the loan at 7.52 is $3,839. That is an extra $433 a month. I mean, that is substantial. So the 548 is the median sold price for Passaic County in northern New Jersey. So now let's pop in the median sold price of Bergen County, New Jersey, and let's see what happens. And it is also substantial. It's $578 a month more at that 7.52 rate, which is where we were at the height of spring. So what does all this mean if you are a home buyer or a home seller? We're going to get to that. Before we do that, I hope this was interesting. Let's just take a look at where our markets are trending. Quickly, we're going to take a look at the data that I look at here. We're going to start with Passaic County. We're going to take a look at some of my favorite leading indicators. And first, the leading indicators are going to be how many new homes are coming to the market. And this is, again, Passaic County, which is a county in northern New Jersey. I'm going to take off 2021, 2022, and I'm just going to focus on where we are in homes that are coming to the market. And why is this so important, you guys? Because, well, we can't sell what we don't have. And new listings coming to the market, well, that's a pretty strong indicator if we're going to have more pending sales and more homes sold than we did the year before. So you can see in Passaic County, the yellow line being 2024, that pretty much for the entire year, we have actually trended above new listings. So we're selling more homes in Passaic County than we were selling last year, which is good. However, if just for your own information, even though we're selling more than we were last year, we are still tremendously down from where we were in 2022, and probably further down from where we were in 2021. That's exactly right. So last year was one of the biggest housing crashes. By that, I mean in units, a constriction in the market. So even though percentage wise and somewhat units wise we're above where we were last year, it's still very far away from where we need to be. Even if you look at like what should be our big push of inventory in the height of spring, which is right here. Here is our line, the yellow line. And you know how I describe this line? This is my wah-wah line, because we never had a push of inventory. And remember what was going on in April? We hit the highest mortgage rates basically of the year. We hit 7.52 in rates, and those higher rates stuck around. So people pull back on purchase applications. Let's take a look at that same information for Bergen County, which is the other county in New Jersey that we are very, very busy in. And we're going to take a look at that same data. And you can see it's slightly different here for Bergen County. We have not had more listings come to market than we did in 2023, the way Passaic County has. We've had less of a change in new listings, and therefore we will have less homes sold and less pending sales because we cannot sell what we don't have. So we only started to trend up in pending sales here. And as far as homes sold are concerned, you can see it's still trending below 2023 and way below where we were for 2022 and 2021, way, way, way below. So we are still in a very tight market with not enough product. And of course, a lot of that is affordability, which is why the mortgage news becomes so relevant. Let's take a look at one other leading indicator, which are price drops. And price drops are a very good leading indicator because why? Well, when a house sitting on the market too long, the seller thought the house would sell for a certain price, the house didn't sell for a certain price, and then the house drops price. That drop in price is an indication that the house was wrong priced. And that is an indication that perhaps the listing prices are going to shift. So when we start to see, and I'm going to take out 2021 and 2022, just to take a look, in Bergen County, what we did start to see are increases in price drops right here, increases in price drops. The question is, will those increases in price drops lead to lower prices? And well, here's what I would say. If the rates didn't change, if the mortgage rates didn't change, I would say probably yes, that price drops usually will mean that homes are going to sell for less money than they would have before. But when rates drop the way they have, when there's this kind of volatility, it's just not the same environment. And so things are going to move a little differently than they would have if the rates didn't change. So let me just give you one other piece of information here. We're going to go to median sale price. One more, hold on. Median sale price, which we were just looking at before. Median sale. Okay, here you go. Sorry. So we were just looking at this before in Bergen County, and you could see Bergen County has the median sale price has just consistently been rising. So even though we've had price drops, we still have the median sales price rising, which is just an indication that perhaps the list price was a little too high. Sellers are being maybe a little bit more aggressive than they should have been. They had to price drop to correct, but even those price drops are still above above where we were last year. So year over year, we were still 11% above where we were. And let's look at Passaic County for that same information. Okay, so let's take a look at Passaic County. So you could see Passaic County again, you had a bit of a drop here, and this is in a 12-week look back. So you had a bit of a drop here. Again, it's April, right? April, and it's through end of July. You had a bit of a drop here. And again, when interest rates get high and stay sticky at high rates, buyers tend to pull back, sellers get a little concerned, price drops probably need to happen, and everybody's sort of waiting to see what that means. Will affordability really affect the market? Is there less demand? What's going on? All right, so I am going to jump back to the mortgage calculator here, and I'm going to remind everybody that when we see a significant shift in mortgage rates over 1%, buyers will pick up a tremendous amount of buying power. So here are my tips for you. I'm going to stop sharing my screen because I don't need to share my screen right now. Okay, so here are my tips for you. You need to get ahead of this if you're a buyer, because here's what is possibly going to happen. Rates have dropped over a point. You as a buyer have now picked up a significant amount of buying power. Number one, if you're in a contract, contact your lender immediately to see if you can float your rate down. If you have a pre-approval, contact your lender immediately or shop around for a lower rate so that you can show the seller that you have much more buying power than you initially thought you did on your current pre-approval. If you're a buyer and you have been sitting back because inflation has hit you hard, everything is more expensive, and the idea of spending the amount of money you had to spend to buy a house was just really too much to bear, well, guess what? You just got a 10% raise. That's kind of what this is. You literally got a 10% raise. So go out with the same budget, keep that 10% in your pocket so you don't feel so stretched when it comes time to buy groceries and do those other absolutely needed things. The other reason I'm telling you guys as buyers to get out there is because what has historically happened is that when rates go down more than a point and stay, home prices will rise. More buyers will come out. You will face more bidding wars. We are already in a tight supply situation in Bergen and Passaic counties. That's not going to change, not that we can see in the foreseeable future. So don't wait for everybody else to catch on. Get out there now if you're serious about getting a house. Use that extra money that you just got, like literally your raise, and buy that house. Even if rates come down more, you can refinance. But if you wait for the rates to come down more, you are going to be facing more competition, and that is going to drive the prices up. So we always say, marry the house, date the mortgage. All right, those are the tips. For sellers, listen, okay, it is a great time to be on the market, right? I have been telling a few of my sellers, hold off till September. I'm not so concerned about the seasonality of the season anymore. What I'm focused on is our interest rates, because when interest rates get high, there's a pullback. Buyers are more concerned, and we have seen that in the spring, and specifically in the upper end market. Right now, when rates are coming down, buyers can afford more. They're going to step back into the market. And you know what? It could very well be a fantastic time to enter the market in the fall and not necessarily feel like you missed it in the spring. So those are my tips for buyers and sellers. And I am thrilled to be representing my entire team of amazing agents. We are in Bergen and Passaic County, and all of our information is in the link below. We are offering complimentary strategy sessions, and you will walk away with a game plan on how to win in today's market. And I would be particularly excited if you guys wanted to find out about our value up method, which is our unique method to help drive higher sales prices for our home sellers. So that is all in the links below. Thank you so much for watching, and I hope you have a fabulous day. And I will be with you next month talking more about what has happened over the last 4 weeks. And we will stay tuned to the mortgage market and how that is affecting the real estate in northern New Jersey. Thank you so much for watching. Bye-bye.